Glove counters dragged the FBM KLCI to end the day in the red, in line with the regional dip triggered by a spike in US Treasury yields. The benchmark closed 0.91% or 14.47 points lower at 1,570.46. Glove stocks came under selling pressure in the wake of the arrival on Sunday of the first batch of COVID-19 vaccines in Malaysia. Of the major players, Supermax Corp dropped most percentage-wise, closing 4.66% down at 5 ringgit 53. Top Glove Corp ended 4.46% down at 5 ringgit 78, while Hatalega Holdings dropped 3.48% to 11.64. Kosan Rubber Industries, however, managed to finish up 1.01% to end at 3 ringgit 99. In a note, TA Securities Research says the lack of firm trending indicators means the KLCI will likely trade sideways this week. Market breadth was negative, with losers outnumbering gainers 704 to 427. Malaysia's economy is expected to return to positive growth this year, according to the World Bank Group, Bernama reports. This will happen alongside other global economies on sustainable progress in vaccine rollouts that will boost consumption worldwide. World Bank economist Richard Record says it expects the vaccine deployment to be mostly completed this year worldwide, leading to strong recovery and demand, as well as boosting trade and commodity prices. Record says that World Bank is projecting an economic growth of between 5.6 and 6.7% for Malaysia and a global growth of 4% for 2021. He adds that China is among the reasons of growth recorded by the Asian economies, Malaysia included. However, Record cautions that risks include slow progress of vaccine deployment and another MCO, adding that consumption is the largest part of the economy. Shan Saeed, chief economist of Juwai IQI Global, says the Malaysian government continues to maintain macroeconomic stability, which is moving faster and had surprised market participants. Shan expects GDP to hover between 3 and 4%, while the central bank is expected to keep OPR at 1% to 1.75% in 2021. Petronas Gas's fourth quarter FY20 net profit rose by 3.73% to 503.4 million as operating costs came down. Revenue for the quarter ticked up year on year to 1.39 billion from 1.37 billion previously. This was due to higher contribution from its regasification and gas transportation segments, in line with new tariffs for regulatory period 1 effective January 1st, 2020. It also declared a fourth interim dividend of 22 cents per share and a special interim dividend of 5 cents per share. For the full year, Petgas saw net profit improve by 3.6% to 2.01 billion, while revenue also increased by 2.5% to 5.59 billion ringgit, underpinned by sustained revenue streams and lower costs. Among its divisions, Petgas highlighted that its LNG regasification terminals in Sungai Udang, Malacca and Pengerang, Johor sustained their strong reliability performances at close to 100% in the fourth quarter. Moving forward, Petgas expects the COVID-19 pandemic to have less impact on its earnings, as its business model and long-term contracts ensure steady revenue streams across all segments. Post Malaysia reported a deeper net loss of 232.3 million for its fourth quarter, compared with a net loss of 7.43 million in the third quarter of FY20. This was due to a raft of one-off impairments, which included 123.3 million goodwill impairment and a provision for a mutual separation scheme, among others. Top line declined 12% quarter-on-quarter to 544.6 million, as revenue from mail and international businesses declined. For FY20 as a whole, top line was 2.3 billion, as the net loss for the year totaled 308 million. There are no comparative year-on-year figures available, as Post Malaysia is in the process of changing its financial year. According to the company, FY20 revenue was driven by the revised postage rates implemented in February 2020 and higher parcel volume due to the increase in online shopping during the MCO and its subsequent iterations. Group CEO Syed Muhammad Najib says the group is currently currently executing its business recovery plan and is confident that the aviation sector will recover if the pandemic is brought under control. He adds that Post Malaysia will continue its transformation journey while enhancing customer experience and leveraging on e-commerce growth. The Malaysian Aviation Commission has called on all airlines to remit any refunds to consumers affected by COVID-19 related cancellations. In a statement, MAVCOM says that airlines, as a matter of principle, ought to refund consumers the amount equivalent to the cost of the ticket. It should also include the taxes, charges and fees and charges for optional services. MAVCOM says that airlines are to exercise the principles of reasonableness and fairness in determining the manner of refund, and that it should place consumers in a similar position from when they first bought their ticket. However, MAVCOM acknowledges that airlines have been accommodative with refund requests. Hard hit by the pandemic, airlines are urging customers to rebook or accept travel vouchers for replacement flights instead of claiming refunds. While there have been easing in domestic travel restrictions, international borders have been closed since March 18, 2020.